We good, James? Okay, heidi ho, everyone, and thank you for joining us for Sunday Market Update. My name's Geoff Pyne, and I'm coming to you live from Tasmania, Australia, where it is starting to get cool. And if you're in Australia at the moment and on the mainland, you're probably not so cool, but it's starting to get cool here. I'm thrilled to be here today because there's I actually can't see anything here, so I'm hoping that you can see me. If somebody could let me know that, that would be fantastic. And certainly if you can hear me, that would be even better. Probably better. There we go. I can see a picture now. There's something I need to address, and I'm sure you can see my little mate. Thank you, Desmond. I'm sure you can see my little mate here. There is definitely an elephant in the room at the moment in terms of trading markets. And it would be impossible to ignore that elephant in the room. I don't know whether I should call it Donny or Trumpy or whatever, but there is something in the room that needs to be addressed. And, you know, over the years of my trading experience, I've had various issues come up. Global financial crises come to mind. Brexit comes to mind. Um, what was that thing we went through? A pandemic called COVID. That comes to mind. And of course, Donald Trump's first foray into the presidency of the United States also comes to mind. In fact, it comes to mind so much that a couple of months ago, 3, 4 months ago now, maybe 5 months ago now, it became of such interest to me on Donald Trump's second foray into the presidency that I thought it was kind of okay and cool to look back and what happened in his first presidency. So I want to go back and share that with you now, um, and see exactly how that's panned out. Those of you who were with me at that time will remember that I went through a few, not necessarily predictions, but a few um, assets that I thought might be interesting to have a look at and see how much the uh, the past reflected the future. You should be able to see my screen now, which is a slideshow, and I'll make it a bit bigger. There we go. You should now be able to see my dollar index chart. And what you're looking at is in 2016, and these lines I've drawn on my chart were, or the left-hand line was the election date in America. The left-hand red line, this one here, was the election date in the US, which was the first week in November, as it always is. And the one on the right is the inauguration date. And in 2016, when Trump was first elected, that's what the market did initially on the dollar, the US dollar. And that's what it did after the inauguration. So the inauguration obviously is when Trump took office. So it was interesting to note in my world that price rallied after Trump was elected and then fell away dramatically over time after he took office. So the promise of him coming in and the reality of him being the actual president. Here's what happened in the recent election. So similar to what we saw in the result of the election, we saw the market or the dollar rally. And it's interesting to note as we noted at the time, 1, 2, 3, 4, 5, 6, 7, 8, 9, say 2 months, which is the difference, obviously 2 and a bit months, which is the difference between um, the election and the inauguration. Very, very similar period, as you might imagine. And then we saw that fall away. The dollar in 2024 crashed after he took office. In January 2025, election here, inauguration there. That was the first thing we looked at, the dollar. The next thing that we looked at, and I'm going to go back, I'm going to go forward, sorry, and show you exactly what's happening now. The next one was gold. And gold, first term, don't forget, crashed. So the world was thinking, oh my God, what's this bloke going to do? And then it rallied. And as you know, it's rallied ever since into 2024 when Trump was elected here. Got a little bit of a sell-off as we did in 2016, and going into 2017 here where it rallied. We're now going into 2025, which is here the inauguration. And of course, we've gone from wherever that was, 2,700 to 3,100 odd. So gold was, of course, a beneficiary of the Trump election. Euro versus the dollar got that a little bit high. Sorry, you can't. Whoops, let's go back again. Euro versus the, am I right there? Sorry, I lost a couple of things. Euro versus the dollar going back to 2016 crashed on the election of Donald Trump and then rallied after the inauguration, rallied substantially. Have we seen something similar? In 2024, we saw the election here, euro dollar sold off, and post the inauguration, we saw and are seeing a euro dollar rally. Is that to continue? Well, let's go further into the story. Here's now what we're looking at. Gold, which we just had a look at in 2016 and 2020. Here's that period right here. And gold actually rallied 68% after the inauguration, but it took 3.5 years to do that until we hit that high. It's not the high now, but it was the high at that point. I don't know why I've got this, and I hope you can see the full screen here. Maybe I can't even squash it. Sorry about that. But it looks to be overblown. Anyway, I hope you can see it. Currently, here's the election, here's the inauguration. Gold has rallied only 10% post the inauguration, big reversal last week. That's where we currently are. So if you compare 68% post the inauguration in 2016 versus currently 10%, and yes, we're only 2 months in versus 3.5 years, that's what we saw after the inauguration. And then we went sideways for a period of time, came back to the breakout point, and then just went berserk, went nuts, as you've witnessed in the last little bit. The next one I wanted to look at was euro dollar. And back in 2016, we saw a 22%, after the inauguration, but it took 24 months, so 2 years for euro dollar to rally to that point, 22% rally. Currently, we've got a 4.5% rally after the inauguration in that same 2-month period. Had a big reversal, well, came off the high. I won't call it a reversal. We came off the high there at the end of last week. And that's interesting to me as well. But if you look at that, 22%, yes, 24 months, 4.5% in 2 months. Interesting statistic, in my humble opinion. And I will draw a conclusion from this, guys. I'm just not just pointing this out to you. I'm going to draw a conclusion from it, or my conclusion anyway. This is oil versus the US dollar. Back in 2016, it fell by 8% in 3 months before it took off. It rallied. So in the 3-month period after the inauguration, it rallied, it fell 8%, but then it just went nuts. Currently, we've got, here's the election, here's the inauguration. So similar pattern that we see here in oil, hit a resistance level and then tanked. Not so much here in 2016 as it has currently, down 19% in the 2 months since the inauguration of Donald Trump. So that to me is also telling me a story. So has gone double plus the amount that it fell in the first term, and now we're sitting below support, which is really, really interesting. Again, I'll draw a conclusion from that shortly. The S&P 500 is the outlier, in my humble opinion. Both of the, or all of those that I've just pointed out to you are very, very similar to what we saw in 2016. So Trump's first foray into the presidency. This is the absolute standout in so much as it is not the same. In fact, it's very, very different. If you look back in 2016, when Trump was elected and there's the inauguration, everything was on the up, and it just did not stop until 3 years later. It rallied 50% in 3 years post his inauguration. So all that way up. Did have some retracements and a deep one there, but you were never out of the money if you'd invested in the stock market or the S&P 500 at that point. Here's the line in the sand here with the S&P 500. What might that be? If you have a look, and you can't see it on here, but I can tell you what that is. That is March 2020. And we all know what happened in March 2020. That was the, what's that called? COVID-19. So the pandemic, right? And it just got smashed, obviously. Here we are in 2025, election inauguration. The market has done pretty much the exact opposite of that. In fact, it looks more like a black swan event, will I call it that? It looks more like that to me right now than it did when Trump was elected, or when Trump's inauguration was back in 2016. So we're seeing a complete reversal. What does that say to me? Well, it says to me that the stocks are not in sync, if you like, with currencies. Where do I go from there? Well, my thoughts on that are that I'd much rather be trading currencies at the moment because they are predictable rather than, sorry, predictable in terms of what happened post-Trump, well, post-Trump's inauguration versus what's happening in the stock market. Now, are we in the same space? Hell no, because Trump has done some incredible things, as we know. Tariffs. I mean, it's not like, cheers, Sam, it's not like we weren't warned, because I remember Trump going, tariffs, 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 you know, they're great, they're great, they're great. Watch the tariffs. Well, here we are, some, 6 months later, and we're seeing tariffs like we've never seen tariffs before. Now, I'm no economic expert or political commentator of any degree, I can assure you of that. But what I can deduce from all of that is that we're in an extremely volatile situation, number one. Number two is fundamentals are ruling the markets, or are they? And that's the question that I think we need to ask ourselves at the moment. What is actually going on? Are the fundamentals, and certainly the fundamentals are making a difference in the stock market like no tomorrow, and are they making the same difference in currencies? Well, I think day to day, probably yes, they are. But then I have a look at the charts, and the charts tell me something completely, I won't say different, but completely intriguing and completely interesting. I'm going to go to the next slide, and the next slide, if I can find the next slide, I seem to have lost my ability to do that. That's weird. Stand by, guys. I have got an interesting scenario. Hang on 2 seconds. There we go. That's much better. Right, the next slide is going back to the dollar index. Now, I skipped over the dollar index, what was happening now on purpose, because I believe that we are acting perfectly technically in terms of currencies. And I think the dollar index is one of the best places to display that. If you look at this chart, this is the monthly chart of the dollar index. Now, the dollar index takes into consideration,
Sorry,
the
Geoff.
dollar
Yeah,
basically.
there's no slide showing, but can you please check it again, please? Thank you.
Okay. Let me see if I can do that. Wonder why. Share. Share that screen. How now, Sam? Okay, cheers. Thank you. So back to what I was saying. I believe that we are in a fundamental, and certainly the market sentiment is fundamental, right? But I also believe that what drives the market, let's say it's fundamental, only drives it to a technical point, which gives us the advantage, in my humble opinion, because if we recognize those technical points, we can trade with or off them. And I think that's really, really important at this point in time to understand. The dollar index, which is what I'm now showing you here, back in 2016, as we had a look before, it actually fell 13% in the 3-month period following Trump's inauguration. Went up as a result of the election, then came down 13% in that 3-month period. We're only 2 months into it at the moment, and the 2 months that we're into now have also been quite negative. Now, if we go to a Disney world or a world in which everything's perfect, then we're going to say that if the current market follows the previous market in Trump, then we're going down 13% on the dollar index, which takes us down to what, 94.75 or whatever I've got there. That's our 13% target. Now, am I going to trade that to there? Probably yes, if I can. Maybe not on the dollar index, but on something else, maybe euro dollar, and we'll have a look at that in a tick as well. But my thesis goes with the technicals, which is I'm a technical trader, I'm not a fundamental trader. But I think the fundamentals are working with me here. And therefore, if I can align the fundamentals with the technicals, happy days. Isn't that what we're trying to do? So the bigger picture here is telling me that this channel is quite reliable at this point in time. So we've gone from the low of the channel to the high of the channel. We've bounced off that. Took a while to bounce off that. And then eventually we got to the low. As a monthly chart, of course, is going to take time. But then we shot straight up here as the dollar rallied like no tomorrow. And now it's taking such a long time. Again, we've gone into this incredible range, if you like. It looks to be bullish, right? This looks to be a bull trend. Like, how can you say it's not? It's a bullish trend. However, if I then look at what happens when we hit the top of this, we go to the bottom. Top of this, okay, we're stalled, but I believe we're headed to the bottom. Maybe break the bottom and hit our 13% target, maybe go beyond that. I've got a very strong opinion that the dollar is on borrowed time anyway. So for that reason, I'm a bear, sorry, and I will be a dollar bear until the proven different. Where we are currently in this monthly cycle, if you like, where we've gone up and down, we're in an incredible sideways range, but we've had a false break of that resistance area, which was the ascending channel or top of that box or whatever you want to call it. And here we are now in this scenario where Trump's inauguration saw the dollar fall 13%, and now I'm of the same opinion. So technically and fundamentally, I've got to be a dollar bear. Where does that leave me in terms of how do I trade this? Well, nothing's changed in my world. So what I want to do now is get out of this. And take you to live charts. Boy, things have changed here. Okay. With any luck at all, you guys can now see my euro dollar chart. Actually, I'm seeing black. Let me know, guys, if you can see my euro dollar chart, which is a monthly chart. Please, if you don't mind, I am looking at the chat. How can you see it's euro dollar is a good question. You'll see the chart moving. That's all I can do. Can you see euro dollar chart, guys? I've got my cursor going in circles. Not getting any chat for some reason. Aha. Thank you. Thank you. Now I'm getting responses. Right. So here's the thing. 2016, here, up we went. 2024, here we go. Up we're going. And going back to my thesis, which is when we've got a structure in place, this being a structure, this descending channel, and blind Freddy can see that we're in a downtrend. So we're getting lower highs, lower lows, lower highs, lower lows, right? I would contest that at the moment. I can't argue with it, right? It's sound principle, no question, because we are getting those lower highs and lower lows. However, have we turned the corner? Is the question that I pose to myself. If I go a bit tighter, you can see that the last time we hit an extreme of this channel was to the downside. Now, again, with my thesis, if there's a bounce off the top, where do I expect it to go next? The bottom, right? Which it does over time. Now, I'm not saying this is happening tomorrow or even next week or even next month. But what I am saying is that where I would like to position myself is not to the downside here on euro versus the dollar, but to the upside. And certainly to this level here. Following what happened with euro dollar here, we went from 103 to 126. So 23, about 20, what did I say before? 22% rally. If we got a 22% rally right now, then we would go from 1.02 to about 1.25 or thereabouts, which would coincide with this level here. I've been a little bit ambitious in going to there, but I think that's the actual target, 126-ish. So that's where I'm at with euro dollar. I believe that the charts will tell me everything I need to know. I also believe that it will take some time for that to unfold. Why will it take some time for that to unfold? Because the market is volatile. The market is very volatile, given that we've got a man possessed, if you like. And that man is currently on a power surge. He's just doing his thing, right? I think he's got mates. And without going into politicals, I think, in fact, I should stay away from that because I'm not an expert. But I believe that we're seeing fundamentals driving the market to technical levels. I want to go through that just before I leave you by going through what's happening on what I call game changers. Those of you who have seen me before will know that I like to isolate game changer bars. Are you seeing the new screen, guys? I'm sorry to ask these questions all the time. This one is has got a market scanner on it. If you can let me know you're seeing that screen, that would be great. Awesome. Thank you, Cleon. So here's why I think what I think. Isolating game changer bars. Now, game changer bars, for those of you who haven't seen me before, will be like, what the hell is he talking about? A game changer bar for me is a candle bar, call it what you want, that changes the direction of the market, right? So game changer, direction change. How I isolate those or identify those is when I've got an uptrend and I see a reversal bar like that, whose high? The high of that bar is higher than the previous bar, right? I'm on a weekly chart. Higher than the previous high. It closed on or near its low. Now forget everything else. As long as the high is higher than the high of the previous bar, and the bar closes or candle closes on or below, on or near its low, that is a game changer bar. So there's one there. There's one there. There's one there. No, sorry, there's not one there. There's no rally. You've got to have a rally first. There's one there. So when you look at this chart and you see something like that happen, technically we were warned that that was going to happen. We were warned that that was going to happen. We were warned that that was going to happen. So that's what a game changer bar does, and that's why I look for them, right? That would have been really nice to have been part of that had you been alert to it at the time. But here's the thing, and here's why I believe that technicals are confining what fundamentals drive the market. Because look at this. Where did that move stop? That move is massive and based on, what is it, Aussie CAD? Based probably on most of last week, but probably towards the end of last week, which was non-farm payrolls. But look where it stopped. It stopped dead in its tracks. So it closed dead on that support level. What do you think is going to happen next? Well, here's what I think. I think it's going to bounce. The next one, Aussie versus the Kiwi. Game changer bar, game changer bar, game changer bar, game changer bar, right? They're all there. And we've got another game changer bar this week or this week that's just gone. Yes, Gary. Yes, indeed. This one a little bit different, but it did stop at, you got it, a support level. Now, I think this one's got plenty of room to go further. But that said, do you think I'm going to put an entry there and wait for that to fall? No, I'm not, because I think that big move is an, if you like, emotive move. And when I see an emotive move, like we're seeing last week in those massive, massive moves that we saw, the very first thing I think of is, well, hang on a minute. Is that emotion really apt? Is it in sync with what the market's actually doing? If it is, fine, but look where it stops. It stops on the support level. I'm not going to hold you up too much longer, guys. I'll just point out a few more of these. This one's different because it's broken through that level. That's a strong sign that we've got further downside because it's just gone through that support level big time. That's Aussie dollar. Swissy versus the yen. Not so much a big move last week, but it does give us a game changer bar to the upside. One point of difference here is that we're coming off a rally into a rally. We don't want to see that. We want to see a rally followed by a game changer bar that sends us in the opposite direction. So here we're going down, we want to see one that's going up. We're going down, we want to see one that's going up. We didn't have it there. We're going up, we want to see one that's going down, not going up here, right? So I would ignore that one and go to the next one, which is Euro versus the Swissy. Once again, you've got this beautiful technical level here. You've got this stopping bang on a trend line at the monthly pivot. What would I be expecting here? Well, it wouldn't be that I'm going to sell that bar. It's come off its low. Yes, it's a game changer bar, but it's stopped dead on its tracks at a strong support level. Pound versus the CAD. Impossible to know pound versus the CAD. What I would say is that it does have some sort of relevance here in that we've had a high reversal bar and a second low, and a first, sorry, lower high. One thing we haven't had is a decent rally. So that's what I always want to see. I want to see a rally into the reversal. I want to see a sell-off into the reversal like we had here, like we had here. That's what I want to see. So indefined, not definite, in my humble opinion, pound versus the CAD. Pound versus the Swissy, here's another one. Look at that technical level. Amazing. Or is it? Are you amazed by this? Are you amazed that fundamentals drive the market so hard? Yet here's where they stop. They stop on a perfect technical level. And then the market thinks about it for a little while and goes on where it was going to go in the first place, in my humble opinion. So what's my point? My point is that as strong as the fundamentals are, as big as this elephant is in the room, the technical levels will work. They have to be strong, and you have to be aware of them, and you have to either A, get out of where you are, or a portion of where you are, be safer, or look for the bounce. Not saying it won't still go in that direction, but I think you'll get a bounce at those strong technical levels. So guys, that's pretty much it. What am I going to trade? Look, I'm a big fan of euro versus the dollar at the moment. How can I find an entry? Well, I think it's worth your while to look at what the market's doing in terms of technicals. Look at this, beautiful. It's symmetrical almost. In fact, it is symmetrical. What happened over here, right? Down, up, down, up, down, up, that is happening exactly over here. We're seeing exactly the same thing happen. Is that over? Well, probably, and I'm not sure if you can see what I'm seeing, right? But this side of this red line looks to be happening exactly the same on this side of that red line. Interesting. And there is the Trump factor, if you like. Election, inauguration, big difference. He's pulling the strings, guys, but he's only pulling the strings to beautiful technical levels, in my humble opinion. I would recommend that you have a good look at them and see where A, the targets are, and B, where the market could turn. I hope you've gained something from that or enjoyed the presentation, if nothing else. And someone else will be back next Sunday to do another Sunday market update. Thanks, Sam, for looking after. It's been a little bit of a thumbsy thing. My apologies for that.